I look at the some of the things that are being published. There was a story 10 days ago that said this is the worst April for the stock market since the Great Depression. 10 days later, the NASDAQ is now up on the month of April, and I haven't seen a story that says, "Oh, stock market has biggest bounce back ever." So
it certainly has gone back and forth.
I think a lot of this is media driven.
Recovery for markets looks to be on, ladies and gentlemen, and we have previously stated that the markets were really overreacting, and so was sentiment. We had record low sentiments, lower than lockdowns, lower than the 2008 crash or the 2000s, max uncertainty, and that's an opportunity that we've grabbed by the horns. There we have a very short clip of Scott Bessent essentially highlighting the biased nature of media. When the stock market fell in the manner that it did, it was all over the place. The recovery was barely even spoken about. And I want to start things off with the stock market because we are tethered to it whether we like it or not before we move on to the cryptocurrency space. What we're going to be doing, and welcome back everyone for another daily market update, is taking a look as it relates to the cryptocurrency markets in regards to inflows from a more institutional grade vehicle, so ETPs. We saw the third largest week on records yesterday or last week. We're going to talk about that, what coins benefited. And then when we look at the technical pattern that we've been looking at, and this is why we're a technical analyst, because we spot footprints in the sand. When we see a certain technical pattern, okay, something's happening here. And we know that institutions have been loading up. We'll also talk about how there was a record, nearly $500 million withdrawn from Coinbase in a single instant. This is institutional. Institutions are driving this market, guys, and they're going to see that continuation taking place. Following on from what Scott Bessent had to say, we've said that the stock market really is overreacting here. And when we had this initial sort of crash, and it was a crash, we said, okay, now we need to see what comes. Are we going to see a mild recovery that could be a relief rally before continuation downside, or are we going to see real strength? And I would say this is real strength. And in actual fact, you have now retraced over 50% of the move. It's likely the rest is going to take place as there's progress on tariffs and everything alike. And of course, this is not just going to benefit the stock market, but the cryptocurrency markets, which are in sync, but perhaps offer a global alternative to be invested in. And that's one of the real promises of sort of Bitcoin and the cryptocurrency space more broadly. So I wanted to start off with that little bit of macro. There is still a lot of uncertainty. However, I think there's going to be a resolve to all of that. And I think actually under Trump, you're going to get a really good stock market. And everybody's very quick to slander a lot of the things that have taken place and, of course, comment on the market price action. But when the recovery comes, and we're starting to see it, nobody will talk about it, and they'll just find something else to bring up. And I'm not a Trump can do no wrong kind of guy. I'm just more in favor for what he's doing than perhaps his opposition. But, of course, I'm not an American, as people like to remind me. However, how many heart surgeons have actually had heart attacks? You wouldn't ask them to have a heart attack before operating on you. Anyway, side note entirely. Let's talk about some of last week's inflows into the cryptocurrency space. We love CoinShares' report. Shout out to CoinShares for releasing this. They track flows throughout cryptocurrency products. So it could be ETFs, ETPs in Europe, ETNs in the UK, exchange traded notes, whatever it may be, or Germany. And this is volume 231, Digital Asset Fund Flows Weekly Report. The US, or $3.4 billion of inflows last week, which is the third largest week on record, as investments seek alternative safe haven, which is interesting. Because one of the laws of Bitcoin, and BlackRock have put this forward, it's amazing how right BlackRock get things. Of course, they are largely behind markets and the driving force to them. But it's amazing that BlackRock really highlighted the fact that Bitcoin kind of could be a risk-off asset. It's a safe haven. It's a lifeboat. Why have we seen gold do very well? Well, around all the uncertainty, it's something that is kind of uncorrelated that you can put your money into. It would be correlated in a demand-destructive event, a liquidity-sucking event, or an unwinding of leverage, if you will, because people run for whatever they can get. However, Bitcoin shares similar properties. And we can see this is a pretty spectacular week that we've just had. Digital asset investment products saw inflows totaling $3.4 billion last week, the largest flows since mid-December 2024. Interesting. The third largest weekly inflows on record. Bitcoin investment products were the main beneficiary, attracting 3.1 billion in inflows last week. Ethereum investment products saw 183 million inflows last week, following a 8-week run of outflows. Interestingly, Solana was the only altcoin to see outflows last week, totaling 5.7 million. I wonder what's going on there. What we can see here is what products benefited. Of course, Bitcoin reigns supreme, followed by Ethereum and then XRP. Now, despite most altcoins like Ethereum seeing outflows over the past 8 weeks, XRP has continued to see inflows. And actually, on a month-to-date basis, has seen more inflows than Ethereum. And on a year-to-date basis, despite there not being an XRP ETF yet, meaning most people can't even get access to it, it's done more than half of Ethereum's volume. I mean, that is insane. And there's this big shift coming. We did look at some news yesterday in regards to pro shares. And then, of course, SUI doing rather well. The multi-asset products doing rather well, but the year-to-date's not so well. Pife has snuck in there. Cardano very flat. Short Bitcoin, Litecoin, etc. And there's a number that aren't out there. So let's continue to read this. Digital asset investment products saw inflows totaling $3.4 billion last week, the largest inflows since mid-December 2024 and the third largest weekly inflows on record. We believe concerns over tariffs, impacts on corporate earnings, and the dramatic weakening of the dollar are the reasons investors have turned towards digital assets, which are being seen as an emerging safe haven. Regionally, it was US investors adding to their positions with inflows of $3.3 billion, although a positive sentiment was broadly globally, most predominantly being Germany and Switzerland, with inflows of 51 and 41 million respectively. Germany, third largest economy in the world, which is good. Bitcoin investment products were the main beneficiaries, attracting a $3.1 billion of inflows last week. Total assets under management have now reached 132 billion, a level not seen since late February of this year. Ethereum products saw $183 million worth of inflows last week, following an 8-week runoff of outflows. Interestingly, Solana was the only altcoin to see outflows last week, totaling 5.7 million. Little activity seen in altcoins, with the exception of SUI and XRP, which saw 20.7 million and 31.6 million respectively. Blockchain equities also saw inflows of 17.4 million, notably into Bitcoin mining related ETFs. And we do hold a number of miners. We do also hold or look at sort of Bitcoin products, which all seem to be moving to the upside, and we have broader trajectories for. But what we're seeing in regards to inflows aligns with what we're technically looking at, and Bitcoin is still a very strong, or in a very strong uptrend, and we're expecting continuation for it. We're getting that continuation that's going to see that, and we did look at this sort of wedge for Bitcoin that is very much playing out. It looks like you're going to push, and a falling wedge will typically retrace the entire pullback that saw the falling wedge be formed, and we know that people are accumulating this. When it walks, talks, and quacks like a duck, it really is a duck. And we didn't just look at Bitcoin. We looked at the total market caps, which all give us a similar indicator and signal. We looked at crypto products also, like Grayscale Digital Large Cap Fund, Bitwise Top 10 Crypto Index Fund, and of course 21 Shares Fund, so on and so forth. So we've got a very positive setup in regards to the stock market starting to retrace over 50% of its pullback. There's likely going to be continuation of that. There is a gap here that needs to be watched, and it is around the sort of 618 level, which is a sweet spot. We've got inflows pouring back in. We've got a more positive sentiment more broadly in regards to tariffs and things like that. And we're seeing accumulation, not just in regards to the ETFs, but also in regards to exchanges. And exchanges have record low Bitcoin right now, ladies and gentlemen. And Bitcoin is still the tide that rises and sinks all ships. Over 7,000 BTC worth 500 plus million withdrawn from Coinbase, signaling potential institutional accumulation and bullish sentiment. Well, we've got all the confirmation. It's why we look at CoinShares Digital asset report in regards to what institutions have been doing. So I really do think we've got a pretty exciting week ahead of us. It's a heavy week from an economic data point of view. Really what we're looking at technically for the cryptocurrency market is playing out. We expect it to continue to play out in regards to the daily pattern that we're looking at, the falling wedges. And that's going to factor into the weekly timeframes in regards to the broader trend that the crypto space is in. Bitcoin, total market caps, crypto products, miners. individual altcoins are all signaling to us the same thing. And when it walks, talks, and quacks like a duck, it's a duck. Fundamentally, the story and the narrative is now supporting that. I wanted to play that clip of Scott Bessent because it is very biased out there in the media, but that is what media does. I'm biased myself, and of course that shines through, even though we try to be as unbiased as possible. Lots of positive things taking place. I think what you're going to see is likely the likes of BlackRock start to enter more altcoin ETFs in the coming weeks. And actually leading on from that, I think you're going to start to see approvals of a hell of a lot of them. And this could be a fundamental driver along with the kind of economic situation looking a little bit more positive. If you guys haven't considered becoming a patron, do so. We sort of cover all the different paradigms in markets yesterday and try and piece them together. And of course, technical analysis is really our guiding light in all of that. So that is it from me, ladies and gentlemen. Really interesting inflows. It aligns with what we're looking at technically. When it walketh, talketh, and quacketh like a duck, it's a duck, ladies and gentlemen. I'm going to see you all in the next one. Thanks for watching, guys. I'll see you all on the flip side.